Top 15 questions and answers about farmer insurance. 1. What are taxes on farmer insurance? The taxes on farmer insurance vary depending on the type of coverage and the state or country you are in. Generally, most states have some sort of tax on farmer insurance premiums. In the U.S., the Internal Revenue Service, IRS, sets the tax rate for farmer insurance premiums. Generally, the tax rate ranges from 4% to 6%. Additionally, you may be required to pay additional taxes depending on the type of coverage you have. It is important to research the specific tax laws in your state or country before purchasing farmer insurance. 2. Why farmers should prefer insurance. Farmers should prefer insurance to protect their crops and property from potential risks such as natural disasters, theft, and disease. Insurance can also provide financial security in case of a major loss. Additionally, farmer insurance can help cover the costs of repairs, replacement, and production if a farmer experiences a major loss. Furthermore, farmer insurance can help provide peace of mind knowing that their investments are protected. 3. Farmer insurance versus farmer loan. Farmer insurance and farmer loans are two different forms of financial assistance for farmers. Farmer insurance protects from potential risks such as natural disasters, theft, and disease. It can also provide financial security in case of a major loss. A farmer loan, on the other hand, provides a source of capital to purchase land, equipment, or other resources needed to operate a farm. Both insurance and loans can help farmers achieve their goals, but they are different tools designed to meet different needs. 4. What are farmer insurance's most common drawbacks? The most common drawbacks of farmer insurance include high premiums, limited coverage, and long processing times. Additionally, farmers may be required to pay additional taxes on their premiums. Furthermore, insurance companies often have strict requirements for eligibility, which may exclude some farmers. Finally, some insurers may refuse to provide coverage for certain types of risks, leaving farmers unprotected. 5. How to deal crises management with farmer insurance. Farmer insurance can help farmers manage crises by providing financial security in case of a major loss. It can also help cover the costs of repairs, replacement, and production if a farmer experiences a major loss. Additionally, farmer insurance can help provide peace of mind knowing that their investments are protected. Finally, insurance can help protect farmers from potential risks such as natural disasters, theft, and disease. 6. What are farmer insurance resources? There are several resources available to farmers looking for insurance. The U.S. Department of Agriculture's Risk Management Agency provides information on crop and livestock insurance, as well as other risk management tools. Additionally, the Farm Bureau offers information about crop and livestock insurance, as well as advice on choosing the right policy for a farmer's needs. Finally, private insurance companies offer a variety of insurance products for farmers. 7. What are legal views on farmer insurance? The legal view on farmer insurance varies from state to state. Generally, farmers are required to purchase insurance to protect their crops and livestock from potential risks. However, some states may have specific regulations and laws that apply to farmer insurance. Farmers need to research their state's laws before purchasing insurance. Additionally, farmers should work with a qualified insurance agent to ensure that their policy meets their needs and provides adequate coverage. 8. What are the criteria for farmer insurance? The criteria for farmer insurance vary depending on the type of insurance and the insurer. Generally, insurance providers will consider factors such as the type of farming, location, and the value of the crops and livestock. Additionally, the insurer will look at the farmer's financial history, credit score, and other personal information. Finally, some insurers may require a physical inspection of the farm to assess potential risks. 9. Why farmers reject insurance. There are several reasons why farmers may reject insurance. One of the most common reasons is cost. Insurance can be expensive and may not be feasible for some farmers. Additionally, Some farmers may not understand the value of insurance and may not see it as a necessary expense. Finally, some farmers may be hesitant to trust an insurance company and may prefer to take the risk of a major loss instead of paying for insurance. 10. What is Social Security insurance for farmers? Social Security insurance, SSI, is available to farmers who meet certain criteria. Generally, farmers need to have worked a minimum of 5 years with a minimum of $1,000 in wages in the previous 3 years. Additionally, they need to be at least age 62 and not receive benefits from any other Social Security retirement program. Finally, farmers may be eligible for SSI if they and their spouses have an income below certain thresholds. 11. What are the lags in farmer insurance? Lags in farmer insurance refer to the period between the insurance policy is purchased and the time when the policy takes effect. This lag period can range from a few days to several weeks, depending on the insurer and the policy. During this period, the farmer may be at risk for losses due to unforeseen events. Therefore, it is important for farmers to be aware of the lag period for their insurance policy and to take appropriate precautions during that time. 12. How farmers can apply for insurance. Farmers can apply for insurance by researching different providers and comparing policies. Additionally, they can speak with an insurance agent or broker to get more information about the different policies and coverage options. Once the farmer has decided on a policy, they can then submit their application and supporting documentation to the provider. Finally, the insurer will review the application and either approve or deny the policy. 13. What are insurance documents requirements for farmers? The requirements for farmer insurance vary depending on the type of policy being purchased. Generally, farmers must have a valid license to operate, proof of financial responsibility, and a farm that meets certain standards. Additionally, farmers must have liability insurance and may need to purchase additional insurance for things such as crops, livestock, or buildings. Depending on the location, farmers may also need to purchase insurance for environmental risks. 14. What is risk reduction management for farmers? Risk management for farmers is an important part of running a successful farming operation. Farmers should consider the potential risks associated with their operation, such as weather, pests, and diseases, and develop strategies to manage those risks. This can include diversifying crops grown, purchasing insurance, and implementing pest management techniques. Additionally, farmers should review their operations regularly to identify new risks and develop strategies to mitigate them. 15. How education and awareness contributes for farmer insurance. Awareness about insurance for farmers is important to ensure they understand the different policies available and the risks associated with them. Farmers should research different providers and compare policies to determine the best option for their needs. Additionally, insurance agents or brokers can provide more information and explain the details of the policies. Finally, farmers should also attend educational seminars or workshops to learn more about the insurance industry and the specific risks associated with their farms. Best insurance for farmers. With a conclusion, the best insurance for farmers depends on their specific needs and the type of risks they face. Generally, farmers should purchase liability insurance, as well as insurance for crops, livestock, and buildings. Additionally, they may need to purchase environmental insurance depending on the location. Researching different providers and comparing policies can help farmers find the best insurance for their needs. With the right insurance coverage, farmers can protect their farm and their livelihood.